what I try and see is basic that anything which is value, that means the stock has fallen or has not performed versus the market. That's why it's value. So the only way you can think about it is the decline structural or is it only a passing cloud? If it's structural, whether the industry dynamics have changed, the management is sleeping, 10 other things, then you try and say that this is a value trap, don't go it even if it's cheap. It's not been growing to potential. However, if it's a passing cloud, the industry has not grown and you have not grown, or if there is a in between a cash flow squeeze, some misjudgment for a year or so, and then you take a hard call, can it come back? Does it still have? Then you say that this value can become valuable, and I'm happy to pay this value today so that at some point this will become valuable. There is also a scale of value, like I've realized that in hindsight only, you realize whether you bought a value stock or a growth stock. In a hindsight only, like 10 years back, had you bought a Jubilant Foodworks, you would have said, I'm buying a growth stock when you would have bought it. In hindsight, when you look at it, then you'll say, "Arey yaar, it was value. I bought a value stock at that time." So ultimately, it depends on where you bought it and what price, and that's where the context of value. So I've realized that ultimately value is something that you buy cheap for a growing business. That's what to my mind is value.